Hello, this is Mark from tradingform.com and welcome to this video on how to develop your own binary option trading strategy. I've got quite a lot of information I want to put into this video. I'm firstly going to start by introducing the trading strategy that I'm going to use for this video. Then I'm going to explain why I've chosen this particular trading strategy. I'm going to look at the time frame and the market. Then I'm going to go on to how we can backtest this trading strategy using Microsoft Excel. I'm going to have a look at the results that we get, and then I'm going to go on and discuss how we could possibly improve this trading strategy, how we could refine it, how we could develop it to become a better strategy and a more profitable strategy. Okay, so on screen at the moment we've got the criteria for the trading strategy. I should say at the start that the particular type of binary options that we're using in this particular case are higher than or lower than, and this means that we would enter the binary option and select whether the price will be higher than or lower than the current price in a set amount of time. Okay, so the trading strategy is going to trade only when there is no existing trade. We don't want to pyramid into a particular move. We're going to enter a trade, see how that pans out before entering another trade. We're going to use a filter. This trading strategy is a reversal type strategy, a reversion to mean type strategy, and so we're going to use a 200 period exponential moving average envelope offset by 0.1% to filter our trades. Because it's a reversal strategy, we're only going to enter long trades when the price is below the low envelope band, and we're only going to enter short trades when the price is above the high envelope band. The actual entry criteria is going to be using the Bollinger Band, and we're going to enter a long trade when the low of the candle is lower than the low Bollinger Band and the close is above this low Bollinger Band. The logic being, we want to see times when the price is pushed outside of the Bollinger Band, but then has been, within the course of the candle, the course of the bar, been forced back up and is now contained within the Bollinger Band. Short trades will be in exactly the opposite situation, when the high is higher than the high Bollinger Band and the close is below this high Bollinger Band. Okay, we're going to use the time frame that I'm going to use for this trading strategy is the 5-minute time frame. The reason I've chosen the 5-minute is because I wanted to have a quick moving trading strategy, and I wanted to have something that is purely dependent on price. It will be on the 5-minute chart. You are affected by fundamental factors, but essentially really what is going on there is price action, and this is what we're going to be testing in this strategy. Also going to use a forex pair. The market is going to be the Euro US dollar. The reason why I've chosen the Euro US dollar is because it's the biggest, the most widely traded and most liquid currency pair. Forex pairs in general, in my experience, tend to reverse more than and better than stocks and commodities. The reason for this, it seems to me, is because these are such big markets and there are so many people buying and selling on both sides that there is very often a good level of support from the other side, which will cause the price to reverse back once it's hit a certain point. Okay, so this is what the trading strategy looks like. We have one other thing actually I didn't mention. We're only going to enter trades where we have a red candle, long trades where we have a red candle, in other words the open is higher than the close, and short trades will be the opposite. They will be a green candle where the close is higher than the open. Okay, so we have the wick of the candle, which is penetrated through the Bollinger Band, which is this yellow dashed line. We have another one here. Again, we have a red candle, and we have the wick that is just penetrated through this Bollinger Band here. Likewise, here is another one. If I scroll back, you can see these two lines here are our filters, so we're only really looking for trades that are either below or above these envelopes. And here we go as an example of a short trade. So we have a green candle, we have the wick that penetrates through the Bollinger Band, and then we have our entry signal. And we're going to take our entry price will be the closing price of this candle. So here we have a green candle which is closed close to the Bollinger Band, and so this would be the entry point for this trade. Okay, so what we have here is a spreadsheet that I'm going to use to backtest this particular trading strategy. On the left here we have our data, our historic data, which is from the euro US dollar. This is the chart that I'm using, this is the data rather that I'm using for the euro US dollar. It is data that has been exported from MetaTrader 4, and then once it's exported we can open it up in Excel and manipulate it and test it as much as we like. So I've entered it in here in these cells in the form of the date, time and the open, high, low, close prices. Here I have our exponential moving average, which is set to 200. I have our upper and our lower Bollinger Bands, and I have our upper and lower envelopes. Okay, so the actual spreadsheet that I'm using here is a simplified version of the spreadsheet that I showed in my ebook course, How to Backtest a Trading Strategy Using Excel. And in this ebook course I showed how you can backtest pretty much any trading strategy on any data using Excel. There is a link on the screen if you would like more information about that ebook course, which is available in the Amazon Kindle store. The spreadsheet that as I said, that I've used from this ebook course, but in fact you really don't need a complicated spreadsheet to backtest this particular higher or lower than binary options. It's really very straightforward. We always know when our close is going to be. Once we've met our trade criteria, our exit is going to be a set number of periods beyond our entry. You would need to have a note of the entry price, of course. I like to also know when and whether we have a trade running at the time, and I use this column for that. And then finally you just need to take a note of the closing price and whether or not the trade was profitable or not. Okay, so I'm going to start it here. I've already got the trading criteria programmed into here, but I'm just going to delete this first cell here, and I'm going to show you how we can re-enter this data, and for the purposes of my spreadsheet, how we can enter the trading criteria into Excel. Okay, so we're going to use a if and Excel function. And so the first thing I'm going to do is to make sure there's no trade running. So I'm going to say, this is my trade run. You don't have to do it this way. This is the way I like to do it. So we're going to say if this cell equals 0. We're using a binary system where 0 represents no trade and 1 represents a trade. And also check there's no trade in the opposite direction. This is quite unlikely. It is always possible in the event of a very big market move from one side of the chart to the other, but it's rather less likely than a trade running in the same direction. Okay, so the next thing that I'm going to do is I'm going to make sure that the closing price, don't forget we're doing a long trade here, is lower than our lower envelope. And make sure I'm in the same row. And I'm going to look at our closing price and make sure it's lower than the lower envelope. The next thing that I want to put in is look for our low. And again, I want our low to be lower than the lower Bollinger. Put a comma in. Next, we want to make sure our close again, and this time is greater than our lower Bollinger line. Okay, so these are the trade entry criteria. Now there was one extra. I want to make sure that our open price is greater than our closing price. This is because we want to see we want to see candles rather that have moved in that direction, not candles that are trying to recover from the other direction. Okay, so if all of these trade criteria are correct, I'm going to tell it just to enter the text of long, and if they're not correct, we're going to tell it to leave it blank. Okay, so these are our trade entry criteria. Our long trade entry criteria rather. We're going to do the same with our short, even though it says trade long here. We're going to do the same with our short entry criteria. So equals, if, and. And when I click up here to reference this cell up here, AS3, I use A4, I use F4 rather, which is function key 4, and this freezes this cell to make it an absolute reference cell. And if you'll see in the top bar, it puts dollars either side of this so that this cell will say constant even when we copy the formula down to the cells below. Okay, I'm going to do the same for this. I'm going to make sure this is 0 as well. And I'm going to go through this. I'm going to take first of all our closing price, and it's going to be the opposite, so I'm going to make sure it's greater than the upper envelope. I'm going to make sure that the high is also greater than our upper Bollinger, and finally I'm going to make sure our close is lower than our upper Bollinger, and not quite finally I'm going to make sure that the open is lower than our close. All of these criteria are met. I'm going to tell it to put in short, and if not, I don't want it to put in anything. Okay, so I'm going to copy these cells below. This is quite a large spreadsheet I'm working on here. It can take Excel quite a while, depending on how much computing power you've got. It can take Excel quite a while to calculate and update its formulas. If you've got a relatively slow computer and you're using Excel, what you have to do is you have to go into options and tell it not to update the workbook calculations automatically, otherwise it is just too slow to do anything. Okay, so I'm going to copy these down, I'm going to click on calculate, and my fairly slow system is going to chug through the calculations. What I like about using the 5-minute chart, 5-minute bars, is that we have huge amounts of data. I've got 30,000 different entries, 30,000 5-minute periods in this particular spreadsheet, and that corresponds to about 5 months. So every year we have 70,000 different records. We want to backtest over a number of years, which we usually do. You can see we've got huge amounts of data, which is fairly slow. It is time consuming to process it sometimes, but it does mean we get a more robust trading strategy at the end of it because we've tested that many more situations. Okay, while it's still chugging through here at the moment, I'm going to cancel this, and I'm just going to go on to the results here. I've already calculated it for this particular spreadsheet. As you can see, what I've got here is our variables. If we do want to change any of the variables, we can do so here. Generally speaking, I would prefer not to. I prefer to have a strategy that works well without, especially on this sort of time frame, that naturally works well without tweaking the variables. It's a good trading strategy that is relatively profitable. Okay, you can see the results. We have here 230 winning trades and 172 losing trades. That's a win percentage of 57.2%. If we were trading this as a binary option trading strategy, returning 80% if we were correct, then we would need to have a trading strategy that is better than 55.56%, is more profitable than 55.56%. As you can see here, we've got a win percentage that is slightly higher than that, which quite frankly isn't bad for our first attempt. There's lots of things we can do to refine this trading strategy. It is quite a simple strategy. We can program it quite easily. There's lots of other things that we can do to improve the strategy. Okay, the other thing that I've done here is I've got when the first trade was, which is October 7th, 2013 at 3:15 in the morning, and the final trade was March the 6th of 2014. I've also broken down the results here into the different time periods. This I think is very useful. At the moment, with just 5 months worth of data, it's probably not very useful, but once you accumulate more backtest results, I think it is quite useful. Forex pairs trade 24 hours a day, which is great. You have liquidity no matter what your time zone. However, they don't trade exactly the same way. Euro US dollar is the biggest of all of them, but even the Euro US dollar won't be as liquid in the early Asian session as it would, say, during the start of the London or the start of the New York session. So here we have the time zones, and these are the broker time. You'll have to adjust them for relative to your own time zone. These are GMT plus 2 times. If you're trading based in London, then you would be looking here at this one here would be 6 AM to 8 AM. This one would be 10 AM to 2 PM. Likewise, if you're in New York, Tokyo or Hong Kong, you would have to adjust those so to make sure you actually understand which time zone it is referring to. Okay, so these results to me are quite encouraging. We know what we need to aim for with binary options. We know we need to be, in this particular case, right more than 55.56% of the time, and we are. Quite possibly there may be different times of the day when we can get even better than 57.2% of the time. Maybe you would need to get up early in the morning or stay trading late in the day, but I think there is some advantage to be trading at the correct times for your trading strategy. So what could we possibly do if you were starting with this trading strategy? What could we possibly do to improve it, to refine it, to make it a better or easier strategy to trade? Well, the first thing that I would do to improve this is to look at the shape of the candle. There's obviously a strong school of trading thought referring to Japanese candle systems, to dojis, to long legs, to hanging man, to all these different types of candlestick patterns which may or may not be profitable or useful to trade. We can test them very easily using our Excel spreadsheet. If we wanted to test a doji, we can say we want the absolute difference between the open and the closing prices to be no more than X number of pips. If we want to look at a hanging man or a long wicked pattern, then we will be looking at the distance between the highest point of the body and the highest point of the wick. There are lots of ways in that way that we could look to choose the shapes, choose the candle shapes which are the best for our particular type of strategy. Other things that we can do, although I said before I personally wouldn't like to particularly tweak around with the variables to increase the percentage. There may be some robust ways we could do to make sure we only take the very best trades, particularly in the terms of the filter, to make sure we only have the very best and likeliest trades that we actually enter. Furthermore, we can look at whether or not, for example, this reversal strategies may be more effective when we are approaching a known resistance zone. Resistance and support zones are somewhat subjective, even when we're looking at, or everybody's looking at the same chart, so you would have to identify a set criteria to be able to backtest the trading strategy and to be able to determine whether or not these support and resistance zones can add value to the trading strategy. Okay, so there we go. I've gone through a particular specific trading strategy. I've explained why I've chosen this strategy, why I've chosen the market and the time zone. We've had a look at the results that can be achieved using this, how we can test it using Excel, and how we could possibly refine this trading strategy to make it more profitable. I hope you found this video useful, and if you would like more information about trading, market trading, and using Excel to backtest trading strategies, please go to www.tradinformed.com.